Are UK house prices about to explode? Now, I don't mean boom forever, mortgage rates don't matter, fairy dust optimism. I mean something more realistic and honestly something more dangerous, a short-term surge caused by policy timing, pent-up demand and psychology, not fundamentals. Right now, tens of thousands of people across the UK are stuck in this same mental loop. Should I buy now or wait for the autumn budget announcement? They're waiting for stamp duty announcements, for landlord tax changes, for grant schemes, incentives, support for first-time buyers, capital gains tweaks. Whatever it is, everyone is waiting. And when everyone waits at the same time, it creates pressure. Pressure that eventually has to be released. And when that release happens, whether the budget disappoints or delivers, we could see a very sharp, very rapid jump in demand. Exactly like what we saw when stamp duty increased, end of March, just gone. Government announces stamp duty is increasing. Everyone rushed to beat the deadline. What happened after the deadline? Well, it was very predictable. The market slumped. So today, we're going to break down what's really happening under the surface, why waiting buyers could become panic buyers, why the biggest price moves often happen after uncertainty, whether this surge, if it comes, is the beginning of a bull market or a bluff before things get tougher again. And if you're new here, I'm William Gale, the founder of the British Home Group. Since 2013, my companies have been involved in over 13,000 UK property transactions worth billions. So I see what's coming before it hits the Rightmove headlines. So let's talk about the pressure cooker market. Let's start with the obvious question. Why hasn't the market moved much this year? It's not really boomed or dropped as an average, even though we've had high but stable mortgage rates, inflation cooling but not dead, uncertainty around Rachel Reeves' budget coming up on the 26th of November, landlords still exiting the market in their droves, first-time buyers feeling frozen, and even some construction firms in financial distress. But also alongside this, no collapse. Prices are flat to steady in real terms. Volumes are subdued. Sellers are realistic, but not on the whole distressed. This is classic pause behavior. People aren't bearish. A lot of people are just waiting. And when large numbers of buyers and sellers wait at the same time, markets don't gently restart. They snap. So let's talk about the budget trap. Everyone's waiting for November the 26th, but here's the psychological trap with this. Most people who say they're waiting for policy clarity will make the exact same decision after the announcement. If the budget brings support, they'll rush in to use it. If the budget brings taxes, they'll rush in before things get worse. If the budget brings nothing, they'll say, well, at least we know, and buy anyway. Waiting buyers, on the whole, don't magically disappear. They tend to pile up, and when they move, they then move fast. So let's move on to why fundamentals still matter. Now, don't take this to mean house prices are guaranteed to the moon, or we're going into a 2001, 2007 style super cycle. No, the fundamentals today are nothing like 2001, 2007. The likely scenario is a burst of activity followed by reality checking the market again. Exactly like what we saw beginning of this year, people rushing to buy before stamp duty increased. In reality, I witnessed overpaying in the process because the big forces aren't going away. Debt is still expensive. Government debt is still high. The Labour government needs more revenue than it's getting. Build to rent growth is relentless. Demographics are changing. Baby boomers will keep selling. Planning hasn't magically fixed itself. This is not a smooth runway. This is stop-start turbulence. And sometimes I get the impression the government is doing this on purpose. Pent-up demand caused by people waiting spikes the market started 2026. Government talks about how their plans are working because of this, buys them time to hope the economy holds on the rest of the year. But let's talk about the silent giant, rents and migration. Here's a factor too many people ignore. Demand pressure isn't disappearing, it's shifting. Net migration is still positive. Household formation continues to grow, yet build completions are down despite this 1.5 million home target. Private landlords continue exiting. Corporate landlords aren't filling the gap fast enough. Rents have gone up 20 to 25% in 3 years in many areas. When renting becomes painful, people push to buy instead, even at high rates, even if they think prices might fall later. We humans don't buy from spreadsheets. We buy from emotion, pressure, life decisions, kids, jobs, schools, marriages, divorces, relocations. Life doesn't wait for inflation targets. Let me explain how the 2026 property market could explode. This is the key idea. We're seeing pent-up demand filling the tanks right now. Why? Budget uncertainty leads to pause. Pause leads to backlog. Backlog leads to sudden surge. Surge leads to headlines. Headlines leads to fear of missing out. Fear of missing out leads to more buyers. Even if structurally the market is flat, the flow of buyers may spike sharply, exactly like we saw with stamp duty increasing March this year. That's not a boom market, it's bottleneck dynamics. It's sugar rushing the market. So will prices explode? Let me be brutally clear. I'm not a magician. I can't predict the future. But could we get a sharp surge from pent-up demand created by everyone waiting for the budget announcements? Yes. And it may hit fast because markets are like people. They don't move gradually. They hold, they hold, they hold, and then they jump. If you found this helpful, subscribe, share the video, comment your thoughts below, and check out this next video up here. I'll see you there. Bye.